I definitely think there's still space for bipartisan work, but around the grantor trust provisions, and really for us, as we looked at this, it was changing the tax treatment of life insurance, right, and death benefit, and something we worked really hard to protect.
Life Matters, a Penn Mutual podcast for financial professionals, bringing you life insurance insights from advanced sales experts and life insurance specialists. Grow a stronger practice today.
Welcome to Life Matters, a Penn Mutual podcast. I'm your host, Bill Bell, Vice President of Advanced Sales with Penn Mutual, and I am so pleased that you chose to join us here today. So we're kicking off season 2 of Life Matters, a Penn Mutual podcast. We spent a lot of time last year talking about potential tax reform in 2025, but here we are in 2025, and we are on the precipice of something here. We know that there are a lot of provisions of the Tax Cuts and Jobs Act that are scheduled to sunset on January 1st of 2026. We know that we had an election, we have an outcome, we have a Republican trifecta for presidency, the Senate, and the House. So chances are excellent that we're going to have tax reform here sometime in 2025, but it's anybody's guess in regards to what that actually looks like at the end of the day. So we invited on somebody that I think probably knows better than most. My friend Jen Fox, who is the Vice President of Federal Affairs for Finseca, joined me for an interview to talk a little bit about tax reform and a couple of other things Washington related. So without further ado, why don't we get to that interview with Jen, and then I'll be back on to wrap up the show after we hear from Jen. Jen, thank you so much for joining us on this episode of Life Matters, a Penn Mutual podcast.
Thanks, Bill. Thanks for having me.
All right. So I've talked a lot about Finseca on this podcast. I think a lot of our listeners are either members or maybe even beyond that in the case of some people, but not everybody that listens to this is going to be familiar with Finseca. So why don't we lay a little groundwork right up front and just talk about what Finseca does and what you do for them. So I guess first question would be, who is Finseca and what do you do as an organization?
Yeah, so Finseca is a trade association representing financial security professionals. Here at the organization, we work with lawmakers to create public policy that helps to better create an environment that helps to support this mission of financial security for all.
So for those people that have been in the industry for a while, Finseca before was primarily AALU, but there's been some consolidation as far as advocacy within the industry. What is Finseca comprised of these days? Because it's not just the old AALU.
Yeah, I like to joke we're the band formerly known as AALU. We joined together with Gamma in 2020, as well as NAILBA, Forum 400. We have a state entity in New York as well. When I started at the organization, we had 2,000 members, and we are getting pretty close here to about 11,000 members all across the U.S.
That's amazing. Well, I've been a member since I think about 2007. And I've worked a lot with Finseca, and I really appreciate the work that everybody does over there. But specifically for your role, what is it that you do for Finseca?
My job at Finseca is twofold. The first is to translate what's going on here in Washington to you all, what's happening with legislation and regulation, but also to advocate on your behalf and to let lawmakers know what's going on in the field and how they can create better public policy to help you do your job and not make it harder.
And your actual title is?
I'm Vice President of Federal Affairs.
Vice President of Federal Affairs. That sounds very fancy. How did you get here today? So a lot of us in the life insurance industry kind of wound up here by accident. I know that I did. I graduated from law school. I didn't even know positions like the one that I have here today existed at the time, and just kind of found my way into the industry and obviously love it. Were you always interested in doing advocacy? Were you always interested in working with financial services? Or did you just kind of find yourself here and found out that you're really good at it and you like doing it?
It's a great question, Bill. My first real job in Washington was actually in the White House in the Office of Presidential Correspondence. That's all the mail the president would receive. And I worked there under President Obama when Obamacare was rolling out and people were losing their health care. And part of my job was to go through the mail and to find people who were losing their doctors, losing their healthcare. And it was in that moment I realized that by utilizing your voice, you can really have an impact on policy, and that lawmakers really do care about what constituents have to say. So that's what made me interested in working in advocacy. From there, I went to the National Restaurant Association. So nothing really to do with financial services, but their story is sort of similar, right? Restaurant owners care a lot about their consumers, their clients, and they're never at their desks. And they sometimes can have a kind of a bad reputation, but everyone has a favorite restaurant. And I say the same thing about financial security professionals, right? Everyone's got a financial, or should have a financial security professional. You're never at your desk, and you care a lot about your clients. So those two sort of mindsets of working with entrepreneurs were easy to connect.
Very good. And how long have you been working with financial services professionals?
6 years in January.
Wow, it's been that long already. That's crazy. I remember when you first started with Finseca. So when you hear things like that, it tells me two things. One, we've got so many great people coming into the industry all the time. And two, I've been here for a really long time. So
exactly right. But just like in this profession, when you make it past 5 years, I've made it. So I'm hitting 6 now.
Yeah. At that point, you've got your 10,000 hours. And
That's
so, yeah, you're now an outlier. So, all right. And then one question that I get asked pretty frequently in regards to what people like you do is, who do you generally interact with in Washington? Your title is Federal Affairs. So you're obviously working with the people in Washington. Are you generally working with our elected representatives? Are you working with their staffs? Are you working with their legislative directors? All of the above. Who are you generally interacting with on a day-to-day basis?
It's a good question. A combination of all of the above. Oftentimes lawmakers are not specialists in financial services, as you can imagine. In fact, less than 5% of Congress has any experience with insurance, let alone life insurance. So a lot of the work I do is on the staff level as well, educating them, but also educating lawmakers. Tonight, I'm having dinner with the speaker, and I'm doing a follow-up meeting tomorrow with his office. So it's a combination of both to make sure that we're sort of infiltrating all levels.
Terrific. Well, speaking of infiltrating all levels, did you know that my House member, her legislative director, actually used to work for Finseca? So have a real in there.
That's it. And they actually lead the Financial Literacy and Wealth Creation Caucus. And so amazing work done by Representative Kim and her team.
All right. You went behind the curtain in regards to where I live a little bit. But I do live in Congresswoman Kim's district here in South Orange County. Last kind of like general question. So you're Jen Fox, Vice President of Federal Affairs for Finseca, but you're also Jen Fox person. And obviously you have personal feelings in regards to what you think should be going on in Washington. How are you able to kind of put personal feelings aside and do the best for the industry at all times? I like to say that we're kind of wearing our Finseca pins or talking about governmental affairs. We're not Republicans. We're not Democrats. We're not Libertarians. We're not Green Party, whatever it may be. We're members of the Life Insurance Party. How are you able to make sure that you're always advocating for the Life Insurance Party, regardless of who you're talking to?
I call myself a chameleon. I can be a Republican one day. I could be a Democrat one day, but financial security profession issues go across all party lines. And at the end of the day, solutions that are bipartisan in nature are inherently more permanent. And so that's why I love this job so much, is we get to talk to both sides of the aisle and create solutions that are hopefully permanent or more stable, and doing that with both sides. The other part of this is, I'm sure many folks on the podcast listening have clients they don't particularly love, but they work with them anyway. And that's a bit of the work that I do here in Washington. Is there's some folks I don't love, but it's my job to be a professional and to educate them on the work that you do every day.
You love some more than others, is what you're really saying.
I have no favorite children.
All right, fair enough. All right, so let's get into the nitty gritty a little bit here. So I guess there was an election in November. It just kind of snuck up on us. Did they cover it on the news? I didn't see anything about it.
And I haven't had any conversations about it, so I'm so excited to talk about it today, Bill.
All right, very good. No conversations yet this morning is what you mean, right? Or maybe, well, you're on the East Coast and I'm on the West Coast, so you probably had multiple conversations about it.
Yes.
Were you surprised by the outcome, at least from a federal perspective, now that we have a Republican president-elect? We're going to have a Republican Senate, which I think is a little less surprising, but then when we also have the Republican trifecta with the Republicans taking the House as well.
Yeah, I would say I wasn't surprised. And Finseca members who had spoken to me leading up to the election, I was pretty confident about the presidency, just given sort of some of the dynamics around the Democratic Party, switching candidates, and just the momentum around President Trump. It was kind of easy to sort of see those things come together, despite what polls said. And then on the Senate, you said it, Bill. Republicans had an easy map. Democrats had seats up in places that President Trump won in 2016. And it just was really hard for them. It would have been an uphill climb, especially with President Trump, who I thought was going to win. Now, on the House, I always thought this was going to be a jump ball. It's pretty tough to see. And quite frankly, well, yes, Republicans have taken the majority. It's by the skin of their teeth, literally. And so I think what I was most surprised about is how slim the margin is. I thought either party could have won, but they would have won by 5 to 10 seats. But in fact, we only have a 2-seat majority right now.
Yeah, so that basically means that if 2 Republicans aren't on board with something, they could tank any bill that the speaker puts forward. Is that correct?
Yeah, absolutely. And if everyone gets a stomach virus one day, you could see that happen as well. It's not just about sort of the voting against. It's also, we've seen this happen. People retire, people pass away. And it's pretty, unfortunate, but at the same time, the majority is hanging on by just 2 seats.
All right. So obviously something that other listeners are very interested in is potential tax reform. So I spent the last 12 months talking about the TICJA sunset. It's still scheduled to occur. So we know that there's going to be some sort of tax reform this year. In fact, I think the Finseca people are calling it the special football game at the end of the year of tax reform, because we don't want to violate any copyright infringement here. But we know that because the Senate is only 53-47, that any bill is going to have to go through the budget reconciliation process. And that has some real implications as far as what they actually wind up putting on paper at the end of the day. For those of our listeners that are not familiar with budget reconciliation, what is that and what impact does that have on a tax reform bill?
That's a good question, Bill. So reconciliation is a process used when you have a trifecta. It helps, so you only need to do a simple majority in the Senate. Otherwise, you're subject to filibuster rule. So you need to have 60 votes. Now, some of the things that we will see in Tax Cuts and Jobs Act are not partisan only, but it's much easier just to sort of wrap everything up and go across as a Republican trifecta and just have it stay a single party. Although, as we joked just a minute ago, it's going to be really hard in the House. But budget reconciliation has to have an effect on the budget. So you can't put the border in there unless somehow you write some language in there that's going to have an effect on revenues or deficit. So that's part of the complication with utilizing reconciliation. You can't just say, we're going to have everyone's licenses be digital and put it in there. It has to have some effect around tax, also around Social Security. There's some rules there. And we have to go through what we call a bird bath. It's a bird rule in the Senate that says what can be in and what can be out. And some of that also comes down to the Senate parliamentarian and their interpretation of the rules. The thing you'll see right now, the dynamic in Washington, is the House is kind of operating like anything can be in budget reconciliation because they're not subject to the bird rules. And then it'll go over to the Senate side where they're going to have to follow by some rules that are currently existing.
Oh, it's the Senate parliamentarians' time to shine.
That's it.
I remember back in 2017, there was a actual discussion about who the Senate parliamentarian is. I'm sure that whomever that person is going to get their day in the sun here again, because it is very important, because they're going to basically give a number in regards to what the tax reform bill can ultimately mean at the end of the day. And the bill's going to have to basically be written to fit within that box. So very, very important person in regards to tax reform here going forward.
Yeah, absolutely. And the other thing people always forget is in order to have a reconciliation bill, you need the number. What are you writing towards? And so that work has to get done first on the budget side before we can just pick a whole bunch of things that are going to be included in said bill.
Now, I've read a couple of articles that say that people in Washington are already working on a potential tax reform bill. Last time around, I seem to recall kind of like an April, May timeframe as far as when actual discussions were happening, actual horse trading was going on, actual pen was put to paper. Are we kind of looking at the same time frame here in 2025?
It's really hard to tell, Bill, and this is what keeps me employed, is Congress keeps changing the rules and changing the dynamics. Right now we have what I would like to say like a tale of two cities here in Washington, the House and the Senate. The House is, as I mentioned, writing their tax bill right now to whatever rules they want to write it to. So the House Ways and Means Committee is currently writing their bill. In fact, we have folks coming in to Washington the end of December to make sure we're engaging in that process. And they're going to try to put that bill to markup in early January. Now, on the Senate side, what we've heard most recently is this idea of a two-step process. So they're going to break up reconciliation into 2 or even 3 bills. One is going to focus in on some of President Trump's key priorities, like the border, immigration, and I've heard that they're going to include no tax on tips in that piece. How they're going to pay for it right now, rumor has it, is they're going to use the Inflation Reduction Act. Part 2 is going to be Tax Cuts and Jobs Act extension and the rest of tax reform. The problem or question that Republicans are asking themselves is, do we have enough juice? Can we get 2 reconciliation bills done, ideally before the summer? I think if either way, if you're going to lump them all together and do one, or you're going to do the 2-step process, looking at Tax Cuts and Jobs Act in specific, you're looking summer, late summer, probably when this all comes together with a bow on it. But you will see the messaging coming out of the House early January.
That makes people that do my job very happy because it gives us a lot to talk about for the first 8 months of the year. It becomes really boring if you have a tax bill in January and then all of a sudden it's like, okay, well, we'll just talk about what it did. It's really exciting to talk about these are possibilities and this could go this way, it could go this way, it could go this way. I look forward to a long drawn out process here, but I know that it's going to be done before the end of 2025.
Hopefully, right? There's this other school of thought that if we get the bill done in early 2026, you can do it for your tax returns in 2025, and it doesn't really matter. Now, of course, we know from working in this profession, planning will be deeply affected. Corporate decisions will be affected. So there's a lot that will be affected. And certainly there's a push here in DC to try to push towards certainty and permanence. And that would sort of be the opposite of it. But with a 2-seat majority in the House, it could take us through the end of the year. Now, Bill, I know you said you're excited to talk about this for the next 8 months. As a tax lobbyist in Washington, I really hope that this doesn't go for the next 8 months because I'm already a boring person and this is going to make me much more boring.
It's fair, but I'm really concerned about my feelings much more than yours, Jen. All right, let's talk about some specific provisions that they might be looking at. So obviously, we work in the life insurance industry, financial services industry. A big part of what we do on a day-to-day basis, at least what I do on a day-to-day basis, is help financial professionals work with their clients in regards to the federal transfer taxes. And when I say federal transfer taxes, I mean gift, estate, and generation skipping transfer taxes. Right now, we have a law that says that we basically have a $10 million transfer tax exemption plus indexing. So next year, it's going to be about $14 million as to regards to what that transfer tax exemption is. But it's scheduled to sunset on January 1st of 2026 and go back to $5 million per person plus indexing. So we have this uncertainty, as you put it, in regards to the future of the transfer tax. What are you hearing in regards to what's going to be going on with the transfer tax? What do you think the most likely possible outcome is?
So, Bill, on this, I think there's 2 pieces. The first is what we're hearing, and you're going to continue to hear this. And I suggest to our listeners to sort of dig through and cut through the noise, you're going to hear a lot about repeal. There's a bill with over 200 co-sponsors in the House to repeal the death tax. New Majority Leader Thune in the Senate wants to repeal the death tax. This is language you're going to hear consistently coming out of the House and the Senate on the Republican side. But the question is what can really get done? What is the cost of repeal? This is the question that folks are asking themselves. How do we get that done? But really, the end goal for many Republicans, no matter where they sit, is permanence. They want to make as much of tax cuts and job tax permanent as possible. And so is it easier to make it permanent at the current exemption level, or is it easier to make it permanent at a repeal level? And the answer is undoubtedly where it is today as far as cost goes. But you're going to continue to hear this rhetoric and this narrative that they want to repeal it. The other thing I would tell our listeners to think about is how President Trump became President-elect Trump. Looking at some of these working class voters, this populist movement in the Republican Party. And so if you were to say, hey, we're going to give these really rich guys a big tax cut, how does that land with the person who voted for you because they wanted no tax on overtime or they want no tax on Social Security? And so that's the other question that President Trump and his team are going to ask themselves as well. Taking that one step further, unfortunately, we have a midterm election that'll be here in about 700 days. And President Trump, despite being what some may call a lame duck president, really cares about returning the majority in 2026. So immediately he's thinking about, how do I keep the folks here in Washington that gave me my majority, even if it's only 2 seats? And how do I expand that? So he's certainly not just going to ignore the voters that return to victory here.
All right. So bottom line, you're going to hear a lot about repeal. Probably not likely because of a number of different dynamics. We haven't talked about the federal debt yet, but it's a large number. I wrote it out the other day. It's right now about 35 with 12 zeros at the end of it. So, I mean, when you do tax cuts, obviously it has an impact on that. Now, the estate tax, people will argue, is not a huge revenue raiser for the federal government, but it is big enough that I think that people would notice. And as you said, the fact that President Trump ran on a very populist platform, and the cabinet he put together is basically the richest in the history of the world, I think, probably would create some pretty bad optics if they did do a full repeal of the transfer tax. So we shall see where it goes.
The other thing too, Bill, is if you repeal the transfer tax, what it does is it allows Democrats a very easy pay for when undoubtedly the pendulum swings back. And right now, when we're sort of shopping for different pay fors, looking for something to pay for this bill, if you're a Democrat in 6 or 8 years and you're trying to do a big tax bill, wow, look at the repeal of the estate tax. That's an easy pay for. So that's the other thing that I think isn't lost on both sides about this conversation.
All right, let's get into some other provisions. So a lot of our listeners are curious to know about the qualified business income deduction under Code Section 199A. Do we think that that's going to be extended? Because it's also scheduled to expire here at the end of this year.
Absolutely. Now, this is one I can speak with almost 99% confidence. It is one that is really important to Republicans and some Democrats as well. And it was something that even if we had divided government, we were working towards making it a very bipartisan provision. Right now, it looks like extension at a minimum, but I know that this is really important to folks and they want to make it permanent. The corporate rate is permanent. And so the idea here is to have the 199A for the parity for the pass-through business. The sort of plus up might be, do they expand what is considered qualified business income? Another thing I will just flag is it's 1/6 of the entire cost to extend Tax Cuts and Jobs Act is 199A. So it's a pretty expensive provision. And definitely if we expand it, it'll become even more expensive. But it's something that we feel pretty strongly about that will be at least extended, if not made permanent, and perhaps even a little cherry on top might be expansion.
So maybe expand it to some people that currently aren't able to take advantage of it, like doctors and dentists and some other professionals like that, or maybe expansion beyond just the 20%?
No, around who can qualify for it. And really, our focus here at Finseca is those folks who are getting income from financial fees and maybe assets under management. The doctors can fend for themselves.
They have their own advocacy groups to work for them.
I have my hands full already.
Fair. All right. So we already touched on this one a little bit, but President Trump did run on some tax proposals that I think a lot of people scratched their head about a little bit, but then ultimately thought, well, that's not necessarily a horrible idea, at least from a 10,000 foot overview level. Now, how you actually implement these things is going to be a little more challenging, at least from a couple of perspectives. But he talked about no tax on tips, no tax on overtime, and probably the biggest one, no tax on Social Security. In fact, I even saw an interview where he said just doing away with the income and just completely replacing it with tariffs, which we kind of joked about on my team. That means $43 bananas going forward. But I don't think that one's likely. But I do think that there is maybe a there for the other three. What do you think are the possibilities in regards to no tax on tips? Do you think that there might be an income threshold in regards to who is eligible for that? And how do you see that going forward?
Well, Bill, you're one of the smartest people I know. So if you know how you and I can both get paid on tips, just please let me know. Because I
Working
definitely
on it. Yeah.
One thing about President Trump, I can say with certainty, is he says what he means, and he means what he says, right? And so I don't think you get out on the campaign platform and talk about no tax on tips, no tax on overtime, and no tax on Social Security if you don't want to try to figure out a way to get it done. And now, unfortunately, for the members of the House and the Senate, they're the ones who have to figure out how to get it done. But it's not like President Trump to just take the norm, right? You take Tax Cuts and Jobs Act and just extend it or make some of it permanent. That's not really on brand for the president. And so how do you spice things up or make it, improve upon it? And that's certainly something that I know the president cares a lot about. And so I do believe that we're going to see, especially now, I'm hearing the conversations happening on no tax on tips. I think figuring out overtime and Social Security, I think folks are sort of pushing off to the side because tips to them feels easier. As someone who worked at the National Restaurant Association, I don't want to touch that one yet. But I definitely know that the president said it and folks are going to try to figure out how to get it done. Now, the question of tariffs is that's a pay for that he sort of thought of here. But how does that actually work in the implementation? And can that actually be done via budget reconciliation is another question folks are asking themselves. The last one, Bill, that you didn't mention was the SALT deduction. That's how they paid for most of Tax Cuts and Jobs Act in 2017. And the caucus has really changed. The folks that are in New York and New Jersey and California, many of those folks are the people who helped deliver President Trump his majority. And this is the number one campaign issue for them. They hear from their constituents back home. So that's when they're going to really need to figure out. And President Trump said on Long Island that he was going to fix SALT. So that's another campaign promise that he made. And he's going to have to figure out how to square all of these up into one pretty tax reform bill or two.
I know I can get behind that last one, a SALT fix. If they even just did away with the marriage penalty, I'd be cool with that. So we'll have to see how that goes. Having worked in the Restaurant Association, I got to think that no tax on tips would actually be the hardest to implement of those three, just because, all right, you've got a restaurant, you got hosts, you've got waiters, you've got the kitchen staff, you've got managers. Some of them are taxed on all their income and some of them are not. How is that going to work? And how is that going to go over in regards to the staffing of some of those places or golf clubs? The people that are, I know that was one of that's where the genesis of this came from, is that President Trump was talking about the taxes or the tips that he gave to caddies on golf courses and that they were taxed on it. But those people would have some of their income not taxed, but the people that work inside the clubhouse would have everything taxed. So it's going to be a bit of a mess in regards to how they actually figure that out.
Absolutely. And you think about this trend that you're seeing in a lot of cities now where there's higher minimum wages and they're moving from a tipped model into a sort of service fee model. So, again, I'm glad to work at Finseca and not the National Restaurant Association.
Last thing from a kind of a tax and planning perspective. As part of some early drafts of the Inflation Reduction Act, there were some provisions that would have had a pretty profound impact on some advanced planning strategies in the wealth transfer space. Things like grantor trusts and GRATs and so forth would have been affected. Ultimately, they were dropped from the bill in large part to the work that you did at Finseca. So thank you for that, because that would have made our job very, very hard if those things went away. And then a couple of years ago, there was a letter that was sent to Treasury by some of the more progressive senators, basically asking for regulatory changes that would have done away with those same things. Never came to be during the 4 years of the Biden administration. Can we assume that at least for the next 4 years, those things are going to be off the table?
I think so. Never say never in Washington, but I definitely think that sort of the movement where we're seeing is Democrats, especially in the Senate, on some of these maybe more partisan issues, aren't going to really have as much of a say. I definitely think there's still space for bipartisan work. But around the grantor trust provisions and really for us, as we looked at this, it was changing the tax treatment of life insurance, right, and death benefit, and something we worked really hard to protect. So I think in a changing administration, more safe than not, but never say never. The new Department of Labor Secretary nominee is someone who's voted in support of the fiduciary rule. So, some of this stuff is sort of still to be seen.
All right. Last kind of nitty gritty Washington thing here. Now, it's been publicized pretty heavily by you at Finseca, but not everybody's probably familiar with this. But Senator Wyden from the state of Oregon has put forward some legislation that would have a pretty substantial impact on private placement life insurance. Now, we don't sell private placement at Penn Mutual, but a lot of carriers do. And a lot of your members sell private placement to help their clients with their financial needs. Why was it so important to kind of get out in front of this private placement bill? And again, over the next 4 years, do we not really have to worry about it? Is it kind of the same answer that we saw with the wealth transfer techniques that we just talked about?
It's a good question, Bill. About a year and a half ago, 2 years ago now, it feels like forever, Senator Wyden, chairman of Senate Finance, started his investigation private placement life insurance. And it sort of went down this path where we saw a report released, I think in February of last year. And we sort of sat here anticipating a bill to be released. And a lot of the work that I did, for the last 9 months until we had election results really was educating people about the tax treatment of life insurance and explaining literally life insurance 101, inside buildup and how it works. The reason why, whether you're in the marketplace or not, we were so concerned is just about 2 months ago, Chairman Wyden had a hearing on taxes and talked about private placement life insurance, where his witness talked about private placement life insurance, in fact, all permanent forms of life insurance, as a tax dodge. And that has always been the fear here at Finseca and within our membership, is that it's a slippery slope. It doesn't stop at private placement. It goes to variable. From variable, it goes to universal. And all of a sudden, we're talking about caps and other limitations to the use of private of permanent life insurance across the board. Now, fast forward today, we're recording in December, and so there's possibility between now and the end of the year that Senator Wyden does release his bill, just because he's done so much talking about it and legislating via press release about it and in the media about it. So it's possible he still releases something. Again, it won't go anywhere, but it's a bad idea that will sit on a shelf. And that's really important. Just like with anything, we saw some risks to the business use of life insurance in 2017. That was a bad idea that was sitting on a shelf that they took down because they needed to pay for. So it's always a risk. Definitely, I've had conversations with Republicans on Senate Finance. They understand the concept, they understand it, and don't plan on utilizing this as an opportunity to make any changes. But again, we remain vigilant here at Finseca.
It's one of the reasons why it's so important that we continue to remind everybody that the words that we use matter. And when we talk about the tax treatment of life insurance, Finseca has been driving the bus in regards to the language. And we always say that life insurance is taxed appropriately. And I hear people that will use things like, oh, it's tax advantaged or tax this, tax that. And I always want to correct people and say, hey, it's not tax advantaged, it's taxed appropriately. And I think that continuing to remind people of what that means to people that might be listening to something like this or might be reading a piece that is put out there is so important. I know that way back in the 80s, one of the things that really drove Congress to be doing something about like single premium life insurance were some ads that were taken out in the Wall Street Journal. So we have to be really careful in regards to the language we use. Life insurance is taxed appropriately. Do I have that correct, Jen?
Yes, that's it. There's a $12 trillion life insurance gap in this country between what people have and what they should have. And we need to make it so that more people are helping us to close that gap and making sure they're properly insured and protecting their families and protecting their businesses. And life insurance is a tool to protect your family and protect your business. And it is taxed appropriately. And anyone who's been on Capitol Hill with me and you've gotten your hand slapped if you said tax advantage.
I would never do that. And I have been on Capitol Hill with you in the past.
Yes.
All right. We like to end these podcasts with a few fun questions. So first one for you. You mentioned earlier that you love some of our elected representatives more than others when you get a chance to work with them. Is there a member or two of the Senate or the House that it's like, oh, I get to go see these people today and I love them? You can give a little love here on our podcast if you want.
So I can't choose favorites. I love everyone just the same. But there's some folks who get it maybe better than others, like Ranking Member Richie Neal from Massachusetts, former life insurance agent with Mass Mutual. He's amazing. Congressman Brad Schneider, Illinois, former ALU member. He was with M Financial for a while. And then your Congresswoman, Young Kim, from California, she is someone who just really understands the value of the work that you do and how it can create wealth in this country and help people better understand. So those are some of my highlights, but I love everyone all the same.
I'm surprised you didn't say Senator Tim Scott. He has spoken at a couple of events for us at Penn Mutual over the years, and somebody that really has a background in life insurance as well.
Well, Bill, we are on a time limit here. Otherwise, I could list everyone who I love on Capitol Hill. It would be a pretty long list, but there's a couple of names that probably wouldn't make it.
Fair. Very fair. All right. Obviously, you're very busy in Washington on a day-to-day basis. What does somebody in advocacy do when you are not helping to protect the interests of the financial services industry?
Other than reading tax notes and all of the other things I have to do to make sure that I'm doing a good job for you all. I'm a fitness instructor on the side, so that's how I get a lot of my energy out. I teach fitness classes. I've tried to golf. It doesn't go well for anyone involved, myself or whoever is with me. And I love to cook and read.
Yeah, I hate golf too. I had somebody on the podcast earlier this year, and he said that he does a lot of his business in the bowling alley while actually bowling. And I thought that it was an awesome idea because you think of bowling alley. First of all, you play a game of bowling, it's half hour, 45 minutes rather than 6 hours on a golf course. Second thing is that you have a captive audience because everybody's sitting by the lane the entire time. I'm trying to kind of change that dynamic where rather than people playing golf all the time, they're doing bowling all the time.
I'm in, but we need to use bumpers.
Yeah, bumpers are fine. It's still bowling. And then if for people that are up in the Northeast, up in New England, we can even do candlepin bowling if they want. I'm all good with that, as long as it's not golf. So no offense to any of our golfer listeners. In fact, every boss that I have is a golfer, but they all know my opinion on golf. All right. Last question for you. So you go to a restaurant in Washington, D.C. for dinner. Is it possible for you to go to a restaurant without seeing either a member of Congress, a senator, or one of their staffers these days?
Maybe when they're out of session, but even then, just a couple of weeks ago, I was having dinner at a local restaurant and half of the team from CNN was eating next to me. So you're always seeing someone around Capitol Hill, and especially I live on Capitol Hill in DC, so probably a little bit more than normal. I see folks.
Thank you so much for the fun questions. I did want to end with your opportunity to kind of talk a little bit about Finseca, why people that are listening should consider membership, and why they should consider going to the Advanced Markets Conference. It will be in June of 2025. It might be a little sweaty, but it will be in June. Why should they do both of those things?
Yeah, so Finseca, we need your help. If you think about Congress today, 70% of House Republicans were not in Congress in 2017. And then on the Senate side, 30% of Senate Republicans were not here in 2017. I can only teach Life Insurance 101 so many times. And so it's so important, so key, and so crucial to get active, to be engaged, and to help make this profession better and help lift up the profession and the reputation of this profession. But we can't do that without your help. June, as I mentioned earlier, we're probably going to be right in the thick of writing this tax bill. And so there is not a better time to come to Washington, other than the fact that it might be a little hot, Bill. But we're going to need your help. We're going to do meetings on Capitol Hill. We're going to meet with lawmakers and educate them about the key profession priorities. And again, there's only so much I can do alone. And quite frankly, as much as they care about me, they care about you so much more. The voter, the consumer, and you're the same one as who their constituents are. So we need your help. 2 days of advanced markets content, 1 day up to Capitol Hill, and what a better time to be here advocating for this profession and for your clients.
I'll be there. I look forward to it. It's one of my favorite events to go to every single year. I got the opportunity to speak on the main stage last year, which was one of the highlights of my career. Looking forward to the 2025 event. Hopefully a lot of our listeners are able to join us there in Washington, D.C., right? Potentially in the thick of tax writing season. So really excited about that. All right. Well, Jen, I know that you have some calls to our elected representatives to make here, so I'm going to let you go. But thank you so much for joining us on Life Matters, a Penn Mutual podcast. I really appreciate it. I'm sure I'll see you on the road several times here, even before the Advanced Markets meeting. But I really appreciate everything that you do. I know our listeners do as well. And I really appreciate everything that our friends at Finseca do. So continue to do the great work for us in Washington.
Thanks, Bill. Thanks for having me. I appreciate it.
All right. Well, thanks again to Jen Fox. What a great interview. Jen is just a consummate professional, somebody that I run into all the time at different events around the country. She always has great information, and the people at Finseca do a tremendous job working with our representatives to help educate on financial services matters, especially life insurance related matters to our elected representatives and their staff. So if you're not a member of Finseca, I would encourage you to consider doing so. And if you have not been to an advanced markets meeting in the past, the one coming up in June is going to be terrific. I will be there. Members of my team will be there. Some other people from Penn Mutual will certainly be there. So I hope that we have a lot of our listeners that will be there in Washington in June for the advanced markets meeting. If you have a question for me or for Jen or for anybody else associated with the show, you're welcome to drop us an email at lifematters@pennmutual.com. Again, that's lifematters@pennmutual.com. That's a special mailbox that only I have access to, and I do respond to every email that is sent there. So again, lifematters@pennmutual.com. If you haven't checked out our show on YouTube, please do so today. If you go to YouTube and just type in Penn Mutual, you'll find our channel. That's where we store all past episodes of the show, and we will be publishing all new episodes of the show on there as well. So it gives a little bit of a different dynamic, seeing myself and the speaker actually talking and seeing our faces at the same time rather than just listening on a podcasting app. So again, just go to YouTube, type in Penn Mutual, subscribe to the channel. Make sure to turn on notifications so that you know that there are new shows that are going to be on the YouTube channel. Like this episode and previous episodes if you can, because that helps to boost visibility through the YouTube algorithmic overlords. That's tough to say, but I did it. So make sure to do that today. Also, if you haven't subscribed to the show on Spotify or Apple Podcasts or whatever podcasting app you use. Make sure you do that today as well, because that way you won't miss any future episodes of the show. Also, if you do subscribe to the show on Apple Podcasts, if you stop by and leave us a little bit of a review, I'd really appreciate it. It only takes a second or two to leave a star review, and 5-star reviews help to boost visibility of the show on that particular platform. And if you have a few extra seconds and you want to leave us a written review, I'd be your best friend at the end of the day. So for Jen Fox, I'm Bill Bell. Thank you so much for joining us on this episode of Life Matters, a Penn Mutual podcast, and I look forward to talking to you again soon.
Thank you for watching. If you enjoyed this video, don't forget to hit that subscribe button and turn on notifications so you never miss an update.